Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. As we head into the Asian Pacific session, close up the U.S. session, I thought I'd take a look at the New Zealand versus U.S. dollar from a technical perspective. Coming off high prices that were reached on Monday. Those high prices were the highest levels going back to August. So what is the correction done so far? What might we expect going forward, and what are the some of the risks? So let's take a look. All right, looking at the New Zealand versus U.S. dollar, we go back to this high right here. This is the last high, spike high here after a corrective move off of this high right here. So this last high spike high, we start to move back to the upside. We start to look toward that as a target, and lo and behold, the high price that we saw in the first or second bar of the 4-hour chart this week went up and tested that spike high from going back to this day right here, which is July 31st, and we found willing sellers against that level. And since that time, again, this is a 4-hour chart, we've seen a rotation back to the downside, and we now look toward the next targets on the downside, which would be right around this level right here, 0.6117, and that level corresponds with this high price right here, this double top right here. That sent the price to the downside. It wasn't until last week where the price started to move up toward that level, found willing sellers, and then broke above that level and found willing buyers to take the price to the high. In the between there, we also found another corrective low that came against this level. So there we're swing highs back here, another swing high right here, and then we had swing lows through here before the market moved to the upside. Now with the price moving lower, we're heading back down toward that 0.6117 level. The low price in trading here today reached 0.6124. So we got within about 7 pips of that level, and we're currently trading around the 28 level. If we get further movement below that level in the new trading day, we'd have traders looking toward the 200-day moving average. That's the green line in this chart, this step line right here. And we moved above that level in last week's trading, fell back below it before reestablishing more momentum to the upside. So the 200-day moving average, which is now moving sideways, comes in at 0.6089, and that would be a next key target on the downside to get to and through if we're able to get below the 0.6117 level. So I'll watch this level right here. If you want to be a buyer on a dip, this is a level that you want to lean against. With the stop below that level, if we go below that level, then we start to look toward the 200-day moving average, and I would expect buyers to lean against that level as well on the dip. We will, if it goes below the 200-day moving average, and all bets are off, we would expect further selling pressure with the rising 100-hour moving average, which is moving up toward that 200-day moving average also in play. The level currently comes in at 0.6064, but as I mentioned, it is moving higher, so we'd expect that over the next few 4-hour bars on this chart, we should be heading up toward and getting closer to that 200-day moving average, increasing the level's importance going forward. If we do find support here or against that 17 level and start to move higher, we'll be looking at the 100 and 200-hour moving averages here to give us some clues. The 200-hour moving average is being breached as we speak right now, just below the level 161 or 0.6131. The price has been below that level, but no momentum to the downside. If we get below the 17 level, we should open the door for further downside. Downside will at least give a confirmation of the break of the 200-hour moving average. If we should move back above the 200-hour moving average or hold the 17 level and start to move back to the upside, we would expect to see that the price, if it got back above the 200-hour moving average, would start to look toward the 100-hour moving average at 0.6165. If we're able to get above that level, that will open the door for further momentum in that direction for the New Zealand versus U.S. dollar. So there you have it. A look at this currency pair as we head into the Asian Pacific session. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.